beating around the bush here. It's time to talk about Evergrande. Evergrande was the largest developer in China and by extension the world, and by that I mean real estate developer. Over the last couple of years, it's sort of shrunk, but it is still the second largest property developer in China, and an absolutely massive company. By itself, Evergrande makes up maybe 2% of Chinese GDP and 4, maybe 5% of all residential real estate sales in China. It has development projects in every Chinese province and in over 200 cities in China. So it's absolutely massive, and we'll get into some of this about what exactly all this means and what does it mean to have 4% of residential real estate sales. This stuff gets complicated, but it's pretty important because right now Evergrande is struggling to pay its bills. Over the next few weeks, a number of loans are coming due, and so late September and early October 2021, all of October 2021, is going to be a pretty wild ride with this company and with the Chinese property sector in general. So the world is just scrambling to figure out what's going on. It's not good on the ground in China. I mean, property markets in China are seizing up. Construction sites across the country are falling silent. People are justifiably worried that this could trigger a Chinese property crisis, something that could spiral out of control like the US saw in 2007, 2008, which then spread all around the world. So hundreds of billions of dollars are involved, and actually a lot more that aren't really calculated properly. So this is a very, very, very big deal. And China's many internal problems, economic problems, social problems, political problems, are all going to come, well, they're going to be laid bare during this crisis. The whole world's going to be able to see what's going on. And I don't think a global meltdown is in the cards right now, but a Chinese meltdown is much nearer than many people think. So, yeah, so today we're going to talk about a couple things. I mean, just to break it down really quick, just first we're going to talk about Evergrande. We're going to talk about the Chinese property market, kind of what's happened, how it got to where it is, how the government is involved in a pretty unfortunately large and difficult to extract sort of way with property in China. And what else? We'll talk about really what the government can do to stop this, what it's trying to do, why this is happening, so how it can sort of solve for Evergrande, trying to fix this and then the property system in general. And then at the end, we'll just talk about the larger stuff, the population, the demography, where all this is really coming from, where it's going, and we'll kind of take it from there because this is sort of the beginning of a really different China and a really different perspective the world needs to have on China. So let's get to it. Right now, global markets are reeling. They're trying to figure out what is going on and trying to figure out what's going to happen and how to price everything. And the problem with this is that the worst case scenario for something like this, it can't be priced in. That's why you have mass hysteria for these sorts of things, because the actual terrible outcome that could happen, say the collapse of the Chinese economy, is so impossible to process and price in without disturbing everything that it's just, well, hysteria is a good word. That's kind of what you get in financial markets over this sort of thing. There's a lot of really good analysis about this sector or that sector, how they're impacted, what it could be. There's all sorts of people coming up with probability trees about what it'll all look like. But we need to go a little bit deeper than that, because the way this works is that Evergrande's enormous size it's so big that it's not just a difficult problem for the Chinese economy. It actually could be something very bad for the rest of the global economy, just the way it could all spread out. So these nerves are justifiable, even if it doesn't lead to a massive catastrophe. But the underlying problem, the underlying issue, isn't actually Evergrande itself. Evergrande is a disastrous company, but it is China's property sector, the entire thing, the whole thing that is ridiculously dangerous, out of control, and threatening to the world economy, to the Chinese economy, to basically everything. It's pretty ridiculous. So let's just talk about it really quick. When you add in the various suppliers and supporting businesses, real estate makes up around 25% of China's entire economy. That, I mean, at this point, actually, it's probably closer to 1/3 of the economy, just due to tight exports, to limited investment opportunities, what China's done since 2015, since the stock problem, since it ramped things up even farther during COVID when it didn't go as far into investments people thought. Instead, it sort of pumped everything into real estate and construction. Yeah, you're looking at 30%, 33% of the entire Chinese economy connected in some way to property, to real estate. So yeah, I mean, for all the talk of 1 billion consumers and China's high-tech industries and drones and ships and space satellites and all of this, 1/3 of final economic activity in China is basically construction. And well, if you actually, people have been to China, that makes a lot of sense because anyone who's been there can see the sheer insane scale of the construction in that country. I mean, you take a train anywhere in China and there's just dozens of apartment like cities, towers and towers of apartments that just follow alongside the tracks. There's forests of identical apartment complexes with thousands of residents built everywhere. And they've been doing this for decades. So, well, it looked really impressive at the beginning. Everyone was impressed. It looked stunning and impressive. I mean, just really impressive. And really, actually, when you actually see it, the fact that it actually happened is just purely the fact that it was done is insane. But the problem is it's impressive in the same way the U.S. real estate expansion was before 2007. Wow, there's so much housing, there's so much wealth being generated, there's so many homes, there's so much da-da-da. But the issue is that, I mean, the Communist Party just kept drinking its own Kool-Aid, at least until the 2010s. I mean, the idea that this is all good, and then you have a property disaster stemming from the U.S. subprime market in 2007, 2008, and it leads to the global financial crisis. This finally convinced the Communist Party that things needed to change. But the actual stuff that it did to maintain order and economic growth during and after the financial crisis actually exacerbated all of these problems, which we'll get into in a little bit. But nonetheless, during the last decade, it became clear to everyone, even to the party, that this construction bonanza could not continue. Like I said, the U.S. had just shown what it looks like when a big property bubble bursts. And the bubble in China is much, much worse than what we saw in the U.S. during the 2000s. A crazy stat to keep in mind, or just to let bounce around your head, is that the Chinese residential property market is now worth $52 trillion. Trillion. That is double the size of the U.S. residential property market, which is the other largest in the world. And this is totally fraudulent. This is the largest asset bubble on the planet, and maybe one of the largest ever, maybe the largest ever. The sheer scale is pretty insane to actually have real assets behind it, not just financial paper and stuff. I mean, for comparison, crypto, which taken finance by storm in the last couple of years, it's about a $2 trillion market. We're talking about something that is just a total order of magnitude. It's insane. It's so, when you're dealing with trillions, I mean, just figuring out what 1 trillion is, when you start getting up to 50, I mean, this is multiples of the Chinese economy entirely. So, at least in terms of GDP. So this is crazy. And thing to keep in mind is that most Chinese apartments, a lot of these homes, the residential market they're talking about, Chinese apartments in Chinese cities are like 400, 500 square feet. They're tiny. They come in buildings without furnishings, and they're surrounded by hundreds or thousands of totally identical units. These are not sort of marquee properties that people would use as assets in the U.S. When you really nail it down into the different cities and everything, things are pretty bad. This is insanely saturated, and the quality of a lot of these units is extremely low because they've been built just industrial mass production. Like the Levitt towns of the world, the things that people remember from the 1960s, and any of the major American sort of suburban sort of development builders, I mean, we're not even talking about the same sort of game here. So keep all that in mind. But what has happened, part of what's happened in the last couple of years that has brought this, I mean, to that scale and just let it continue for so long, is that there are so few investment opportunities in China that money just keeps getting pushed into real estate. So in China, in 2015, 2016, there was a big crisis with the Shanghai Stock Exchange. I think I actually mentioned that in the last video, just talking about why the Beijing Stock Exchange and why they're trying to create one, et cetera. There's a whole thing about that. You can go listen to that if you want. But that caused the equity markets in China to, I mean, it caused people to not put their money into them. They don't think it's sort of a casino gambling type operation. People didn't trust it. And at the same time, China made it much more difficult to take money out of China. They were trying to fight the capital flight that was resulting from the fact that there were so few investment opportunities. So what people have done is they have just piled money into hard assets, to real property in China. And I mean, just to give you a sense of some of the numbers, 40% of Chinese consumer assets, any wealth owned by your average person, is held in property. And 78, almost 80% of China's urban household wealth comes entirely from property. That's double what it is in the US, more than double. Property is so connected to everything in China that it makes something like the subprime crisis in the US look almost trivial, because there's so few assets, there's so little diversification around beyond property for the average Chinese person that it's insane, really. It really is insane. And we'll get into a little bit of this later, but this system, what spawned this system, it's very twisted. To say it's twisted is just a bit of an understatement. But what happened is that basically the Chinese people realized that, okay, we can't invest in foreign stuff, we can't invest in Chinese companies, or you can't really get into them in the same way because you don't have a good stock exchange, a good index for that. Okay, so the one thing you can really do, obviously you don't want to do bonds and not get loans and then not get any money, although that's much, the debt market in China is different, but what you can do is invest in property. So people did that, and what happened is property prices kept rising for years and years in China. They just kept rising, and people kept investing in them. And what happened is the Chinese people figured out that the Chinese government is too scared of allowing property prices to fall, to let them fall. So basically, people just kept piling in to the property market, and this is part of the reason. So you have that, and you get people, they keep building. You have everything to just keep spiraling up because prices keep rising, keep building. The problem is that the inflation that you see in urban real estate in China as a result of all this is insane. These are just some more stats. I mean, the ratio of home prices to incomes in wealthy coastal Chinese cities, it's 3, 4, almost 5 times what you see in a place like New York, which is the craziest in the U.S. I mean, it's nothing compared to China. It's gotten so crazy. There's so little else you can invest in that it's all just plowed into real estate. And the average home in China is now costs over 9 times the average income. So average home price compared to the average income, it's 9x what people have, what they make during the year. So in the US, the sort of rule of thumb is you want something like 2.5 times what you get. So if someone makes $150K a year, you want them to be looking at a $150,000 home. Obviously, things are inflated in the U.S. as well, but 9 times is pretty insane. The people trying to buy homes in a place like New York, they're obviously not making something like that, but 9x is crazy. And this problem of investment options is a major one that goes through all world economies. We saw a similar thing in the United States before 2007. There was sort of the tech bubble had burst, and that was sort of soured, and a lot of people left capital, and you had long-term capital management. You had all these problems in finance and tech and all this. So people plowed money into property, and you ended up with the bubble, the subprime crisis. But even more important than the United States, probably for what we're talking about and what we see in China, is Japan in the late 1980s. When Japan was thought to be on the path to ruling the world and doing all this, it had a massive asset bubble brewing, particularly in real estate, and that's really what we're seeing in China as well. But it's just so much worse in China than either of these that it's hard. Again, it's hard to grapple, sort of get your mind around. I mean, one way to think about it is that China, every year, how much I'm talking about how there's not a lot of investment opportunities. Well, how much are we talking about that's being invested in real estate? Well, in the U.S., I think at the height before 2007, there was about $900 billion being invested in real estate every year. China is last year did 1.4 trillion into real estate. That's over 50% more than the US. And this bubble has been brewing for way longer. And it's the amount of investment all across the country has been so much larger. And then if you actually count the sort of the supply and you do this sort of currency things, I mean, it's an insane amount of construction and housing production. It's absolutely wild. And, you know, due to the massive oversupply and the marginal quality of a lot of these units and the cities they're in, the real value of the Chinese property sector, which I was saying, you know, which is calculated, I think it was Morgan Stanley that said it was about 52 trillion. You know, we're looking at something that could be about a third the size of what it says on the books right now. So that sort of loss, I mean, this is what the Chinese people realize. They realize, okay, if housing prices fall, so basically what this is saying is that if the housing prices fall, that would wipe out the wealth. 80% of Chinese urban household wealth is in real estate. If you allow the value of all of their homes to fall, well, their wealth just got annihilated. And Chinese consumers are actually they have a lot of debt. They're not like super savers in the same way anymore because they've just been money, you know, inflation, all that kind of stuff. They want to put money somewhere, so they've been putting it into real estate. Well, they got a lot of debt to pay for these homes. And if you lose the home value and you have the debt, this is the same thing we saw with the subprime problem. Again, just on a more massive scale. And this is what the people realize. They realize, well, the governments, there's no way they would allow this to happen because it's too threatening. It would be too dangerous. Tens of millions, hundreds of millions of people could be not just angered. I mean, they could lose everything. So that's kind of the argument for what, that's sort of the basic reason why we saw what happened is there's very little options for consumers to put wealth, you know, invest in. So you get a lot in real estate. This is common. You see this actually all over the world. You have various supply constraints with housing, or you sort of give people subsidies to buy homes, or you sort of constrain land prices. Because basically, since somewhere in the 70s, we live in a world of you gain wealth by owning assets that appreciate. Anyone who works a 9-to-5 job, anyone who has a W-2 job, anyone who is just getting a salary, you know that you're not sort of building wealth in the way that crazy high-flying people are. And the way that happens since the 1970s, and really kind of in some sense forever, but in particular the way we're talking about now, since the 70s, it comes from owning assets. And the only major asset that most middle-class people have around the world is a home. And this has been very successful in the US for the baby boomers, but governments are just caught. All governments are caught of what to do to allow some form of wealth creation for average middle-class people. And real estate is just the main thing that everyone goes to. So everyone knows that real estate is not the best investment. It's not even, in a lot of sense, an investment. It's more of a consumption good. There's all these things you can say about it. But the idea that you could sort of invest in these homes and they produce something is dubious, because really it's just a home. And the asset inflation, the price inflation you get from your home has to do with all sorts of local demand factors and the beauty of where you live and all that kind of stuff. Has very little to do in a lot of cases with even what your house looks like, or what, you know, all the various homes and all the stuff that realtors talk about. It's a bit more complicated than that, than what you hear just from a real estate agent. So the question for China is, well, what do? They had to allow some sort of household wealth to form in China. Actually getting that wealth, I mean, there's a huge thing that needs to go on. You need to transfer major amounts of capital within different parts of China's economy. But the easier thing to do is just allow the property machine to keep running. So that's really what we've seen in China. And this, China's government's scared because if this bubble pops, it's enormous. It's so big that it could take everything down with it. And yeah, I mean, so this is not just an economic issue, but a really major political issue for China. This is something that could take down the entire Chinese state, because it would be everything. It would be all the employment problems that you'd get from people losing jobs, from construction sites not functioning. It would be all the lost wealth, all the angry urban consumers. It would just go on. It would just cascade through the system. So this is a major thing. So that's why we're talking about it now. That's why the world is freaking out about it. But let's move on really quick. We talked about the consumers. We talked about this sort of game of chicken. There's very little investment options, and then people just plowed into real estate, right? A lot of people in the U.S. plow into real estate. It makes a lot of sense. This is not something unique to China. What is more unique to China is this government angle. So a major reason why things have gotten so bad in China is because of the heavy state involvement in the property sector. The U.S. does things like a 30-year mortgage, and it does all sorts of things in the the private real estate development sector. It does all sorts of things, but nothing like we have in China. So before the 1990s, late 1990s, there was no real land market in China. Everything was owned by the government. It was, this is sort of a classic communist thing, like actually what we had, what they had. And that changed. In 1998, they allowed basically a functional land market. You had basically the government still owns everything, but you have like secondary, tertiary market where you can sort of exchange things and make like you own them, I guess you could say. That was good enough for people. They started doing all sorts of things. But what happened is that a lot of land in China, no one owned it, right? You didn't have a lot of development in China. You liberalized all this, the property market in the 90s. There's still nothing there. So it's actually local governments in China, these provinces and various lower levels that owned all the land. So what happens is that these local governments sell the land to developers and businesses, but particularly just land developers, property developers, to make stuff out of it, right? And what happened is that this is a massive source of revenue for local governments and in part for the central government. So like in 2019, over 50% of Chinese, the equivalent of like a U.S. state, although they have no autonomy the way U.S. states do. So more, province is a good way to think about it. One of these Chinese provinces, over 50% of their revenue came from land sales. So this, as you can imagine, this is the incentive for this is for the government to also constantly push just endless land development. And that's what you had. So Chinese governments, basically the central government would just said to lower level governments, all of you need to hit your growth numbers. And, to do that, just to hit the economic, GDP numbers they had to hit every year to keep everything running, to keep everyone impressed and the whole thing moving along. The easiest way to do this was just land development. You just sell it. Chinese investors were already desperate to buy these assets. They wanted to set up factories. They wanted to have homes. They wanted to do this. And, you had hundreds of millions of people flooding into cities, from the fields. So there was a real thing, like back in the, 90s and 2000s, there was a real, you were building things and people were coming. That's true. There were hundreds of millions of people that were coming. There was a third of the Chinese economy, the Chinese population was sort of urbanized, and now it's closer to 2/3. You're looking at like a major real push for real development. And, construction gave provinces, they gave them economic activity and sort of visible structures and jobs and revenue, and that could spiral up to give you more of all of those things, right? You get more investment, you get more of this, you develop nearby parcels of land, and it would just go on and on. It felt like a virtuous circle. And this is kind of always how it does it always feels like that whenever you have one of these bubbles forming. So this development just happened everywhere in China, right? You had the local government. You see any local government just making all this money, everyone just got in on the game. It's the basic way things were done. The problem is that everyone got addicted to the game as well. There was no end in sight to this. Just think about it. You had local governments they needed to keep hitting their numbers. Developers had to keep building to satisfy their investors, their owners, their lenders. Buyers kept buying. Land and home prices keep rising. You get more sales, you get more construction, you get more buying, and it just goes on and on and on. And it went on and on and on beyond when it was necessary or rational. And at this point, it's morphed into something downright scary. Just the scale of all this. It's moved China into some very, very, very dangerous territory. For years, people have stopped buying these homes as homes. We're talking about people who are buying their second and third homes. These are purely speculative assets at this point. And, they're purchased to cash in on price rises. Again, this asset appreciation. Everyone is trying to grab the asset that it's going to appreciate. So are you going to buy some stock and hope it appreciates? Are you going to buy crypto, hope it appreciates? Are you going to buy land or property and hope it appreciates? That's the game. I mean, more people should probably try and start businesses and hope they appreciate. But whatever you're doing, that's the game. And by 2017, 20% of homes in urban China were vacant. By now, this is probably over 75 million units, and yet construction continued. It kept going. You basically have oversupply everywhere, just at an insane scale. People aren't, it's totally speculative, right? People, like early on I was saying, yeah, they're plowing into this and they're using it as a way to build wealth. But once you've invested in the first home, then you have to do the second, then you have to do the third. And this is one of those things where markets can become very divorced from the actual real function of whatever it is they're doing. So, and this is the financialized aspect and the government involvement aspect of things. Basically, this is no longer really a property market. It's not a residential market meant for people to live in. This is a real, speculative, real property market. Asset, market. It's bizarre. This is the sort of thing we're also seeing in the U.S. all over. A lot of, before 2016-ish, 2017, a lot of Chinese investors were doing the same thing all around the world. They were buying big, impressive, condo units in fancy buildings in major urban areas all across the country. And when you went to see, when you drove past these buildings at night, most of the lights were never on because they weren't being used as homes. So this is another broader problem in the world. You just have this question of endless speculative investment in industries that get just divorced from whatever it is they're supposed to be doing. And that's a major problem. So that was not just China or Chinese investors that were doing that. This is Saudi Arabian, this is Middle Eastern, this is Russian. This is money flowing all over the world, just looking for returns on investment, greater yields. That's basically the story since the 1990s at least. And it's crazy. What you see with this crazy level of government involvement in property in China, along with the insane demand on the production side from the developers and the consumption side from all of the consumers who have no other options. Basically, this resulted in some of the greatest, probably the greatest source of official corruption in human history. Just the amount of money that transferred and just rights and the ownership, it's insane. Just as an example, minor thing, there are properties like, let's just use Beijing, for example. There are properties in Beijing from the moment the construction starts to get halfway through it. The ownership of this property has been transferred like 15, 20 times because it's going from one to the other. It's flying around and no one really cares where it happens. It's sort of an asset you use and it's negotiated for this. It's leveraged against that. It's insane. You don't see that at all. Like in the United States, you have a much more structured thing because things could sort of fall and collapse. It's whenever there's a major business downturn, less so this year, especially in LA, but major business downturn, you have these down cycles in property. You don't want to be on that cycle. You don't want to be caught up. So there's a lot of stuff on the financial side to sort of lock people in, to make sure things are right, to get the pre-sales, do all this kind of stuff. In China, we'll talk a little bit about a major sort of overarching deception that the Chinese government has been operating under that's allowed a lot of this to happen in a little bit. But right now, there's just basically the basics of a sort of really functional business cycle in real estate has never existed in China during this millennium. So they talk about like downturns in this, and 2015 was a downturn, blah, blah, blah. Not really, because you've never seen this level of government involvement. So you have so much local government involvement, then you have the developers and you have the consumers. But then you also have at the central level, at the the Beijing government level, you also have that government doesn't want these prices to fall, it got to the point where everyone was sort of a part of it. Everyone was sort of feeding at the trough, and to take it away, for the central government to take it away, just makes enemies of everyone. You really have to be kind of like where Xi Jinping is. You have to really have annihilated all your enemies to even be able to do kind of what he's trying to do now, which we'll get into. So yeah, we'll leave it at that. The last thing to keep in mind is that a major reason why companies like Evergrande took on the massive risks they took is because they're triangulating between the consumers and the local governments and the central government. They're able to play this game. They're able to play the game. They know the local governments want to keep selling. They want to keep selling land at high prices. They know that consumers want to buy homes that are going to appreciate in value. They know the government is worried. The government is worried about having any of this cause social problems. So just like Chinese consumers felt the government was too chicken to let home prices fall, developers thought government would be too chicken to tighten credit. So credit, loans are what enable this whole thing to keep going. And they knew the government was too chicken to really, pull the plug on this whole thing. Evergrande is basically a classic company, classic Chinese company that is just chasing credit wherever the government spews it. And, then it tries to absorb enough of this credit to gain some sort of leverage over the government. So that's kind of what you see. I mean, the way it works in the Chinese real estate is you're just taking in loans from banks all the time, right? They don't do. Anyone who's been in real estate knows you're getting loans for everything, and it's the access to credit that really enables all of this. It's the terms, it's the loans, it's the rates, it's the total interest, it's the total payments, it's where you are in this whole thing. And often, to keep everything stable, you have to keep getting bigger. So that is what happened in China and with Evergrande. And this is also why Evergrande's a pretty weird company. If you read about it, it's like, well, why is this property developer randomly building theme parks? That's actually kind of normal. But it's also decided to become an electric car company. Come on. China's electric car market is also ridiculous. It has like 900 companies. It's, again, total fraud everywhere. But what's going on is that these are companies like Evergrande becoming an electric car manufacturer. It's just chasing government money. That's what's going on. The government is promoting electric cars. It wants to, jump past everybody on the technological frontier. So it's pumping it, pushing it and then pumping money into it. And Evergrande, this is Evergrande's game. They know to go where the governments the Chinese government is pumping money. So that's just what they're doing. They're just following the money. It doesn't matter if it's into extremely difficult industries, really, really capital intensive and cutthroat with really low margins. It doesn't matter. It's just following the credit. And that's important. I mean, when you looking about why things are so twisted, there's a big reason why. There are so many other pieces to the twisted, tangled mess of the Chinese property market. But at this point, we know a bit about where all these problems are coming from and who's sort of taking what perspective, except for the central government. At this point, middle of last decade at least, the Chinese Communist Party knew this was a problem. It didn't know what to do about it. It still doesn't know what to do about it, really. But it is at least trying to get things back under control or stop the insanity a little bit. And what we are seeing with Evergrande is actually the direct result of the party finally trying to pare back the real estate sector. It's tried this on and off for a number of years with very little success. And this is part of the reason things got so bad, because it just couldn't stop it. It couldn't just let all the pigs feed at the trough forever. And then the pandemic made things worse. Everyone plowed into real estate even more. Chinese consumers did, and the developers started giving discounts, and they had incentives, and the local governments were desperate because they had so many loans and debts. It's just everyone in China is in debt, crazy debt. Something like almost 60% of the debt accumulated over the last 8-9 years, all around the world in households happened in China, and that's just the household. So it's bad. So in 2020, during the pandemic, China saw what was happening and saw that another frenzy was happening in the real estate market, put in new controls on debt levels and liabilities and leverage ratios and boring stuff like that. And overall, it wasn't even doing that much to rein things in, but the effects were immediate and they were felt everywhere. Real estate sales went down, price rises started slowing or reversing. The changes the government was making were major signals to what it wanted done and what the way things were going to be going forward. So there were major signals, and these signals started to basically unravel a lot of the basic assumptions underlying finance and financing in the property sector, and all the assumptions that people make for their purchases and for the taking on debt and investing and constructing. So it's basically targeting the engine that kept targeting these various ratios and stuff, started targeting the engine that keeps construction, the construction machine in China moving forward. And Evergrande is getting hit because of these changes. It may sound like it came out of nowhere, but I think I already said, this is an intended result of Chinese regulatory changes. They needed people to get the message. Otherwise, this is going to be insane. You're going to have trillions of dollars more pouring into real estate because there's so many headwinds everywhere else. Yeah, and so Evergrande and a host of developers, they racked up massive debts in the process of building all these massive apartment complexes all over the country. And they were also pre-selling everything. So they're saying, hey, but in a speculative sense. So they're selling it to people who are often doing their first or second home or their vacation home or their sunny home, basically the equivalent of Hawaii and stuff like that. It went crazy. It went really crazy. And they expanded all sorts of incentives and discounts and things during the pandemic to keep things running. But that limits your cash flow. And, well, basically, it just made everything harder to pay off. To entice consumers, China had to give them a lot more than they were getting just to entice them in. And that's made everything hard to pay. It's kind of unclear what exactly happened specifically with Evergrande. I mean, is it sort of did local governments sour on it? Did certain consumers? Did suppliers? Are there problems with the supply chain with construction? Were the input costs too high? There's many things that probably all came in together as one to really make its current operations insolvent, basically. But that's where we are. And ultimately, its debts are impossible to pay. There's no way it's going to happen. And throughout the property sector, they're basically impossible to pay. But China is, like I was saying, trying to send a signal about what the Chinese economy is about and what growth patterns need to look like in the country going forward. And they're saying it must involve a lot less debt-fueled construction. In general, it must involve a lot less debt-fueled everything, but they can't do that yet. So they're just at least starting with one of the bigger problems, which is construction and the property market. This is a $52 trillion bubble we're talking about here. You can't really let this go on forever. The real challenge with all this is that real estate is a major part of the whole Chinese growth story. And as it falters, capital isn't going to go into like productive industries. It's going to start burning away. You always hear that in the US. Oh, we need to move capital to more productive. It's going to move from this unproductive thing. It's going to that productive thing. Well, maybe, but most of the time not. It just moves to some other random, soon to be inflated consumer asset class. That's usually what happens. And in China already has a massive share of global exports, and deglobalization and protectionism already threatening that. Its tech companies face massive global competition and regulatory assaults around the world. Chinese households are already in debt or extremely indebted. Debts they incurred to buy real estate in the first place. These homes are supposed to be the nest eggs that the Chinese people use to pay for the retirement, which is something the government can't pay for because it's the aging of the Chinese population is such a major issue in the size and population structure. The demography of China is such a big issue that's impacting everything, which we're going to get into in a little bit, that you can't really, they needed these homes to actually pay for their retirement because the government's not going to have a social security for hundreds and hundreds and hundreds of millions of Chinese. It's just not going to happen. What would really need to happen, when I'm saying that the Chinese government is sending a signal, what would really need to happen is a sort of wrenching transformation of debt in China and debt and assets in China. And basically, I don't want to use basically a redistribution of these debts and assets across businesses, consumers, and government in a very complex rearranging of the whole capital and debt structure in the country. And that's just not going to happen. That is just not going to happen. What the government's doing is it's doing a much more limited sort of credit correction in property. It's trying to limit the capital accessible to Evergrande. That's another thing that probably happened to Evergrande. Is it just maybe it didn't come from local governments, but in some form it has less capital available to it, and that is what's going to happen. That's what's happening now. So it's not this massive transformation. It's a credit correction. It's a lowering of credit levels for one industry, for one very threatening industry, and it's sort of rebalancing throughout the rest of the Chinese economy. Problem with this is, of course, that China is so overcapitalized, so much debt already everywhere, that this doesn't matter anymore. But that this small correction now is so late, it won't matter anymore. But just getting back to Evergrande, I mean, it may not blow up the Chinese economy or cause the entire Chinese property market to permanently freeze up. But what Evergrande is a sign that we are entering the end stage for the Chinese economic system as we know it. That's basically what's happening. And the giant apartment complexes are going to be left unfinished and half-built, and many on the books will never even start construction. The insane overcapacity across all Chinese industries, not just property, it's finally coming to a head. And what we're seeing is it's happening in one of the most overbuilt sectors of them all, maybe the most overbuilt sector of them all, property, real estate. And that's why this storm is hitting the world. What we're going to see now is how well Xi Jinping and the party plan to weather that storm. So let's talk about that. First, I'm going to put on the light. So that was that. We've talked. This is going to be we're going to do a long live stream here because this is important and it's worth it. So we talked about that. We've talked about some quick recap because we're going over a lot of stuff here. Talked about why the property sector set up this way, and what happened, what the incentives were for consumers, for developers, for local governments, for the fears and worries and concerns of the central government. Now we have the central government moving to actually make an adjustment to what you see in the property sector. So let's talk about it. What are they going to do? How's it going to look? How's it going to shake out? What's going to actually happen to Evergrande, right? The big question started this video. What's going to actually happen to Evergrande? Well, in the West, we're talking about Evergrande in terms of like, oh, is it going to be bailed out? Is it not going to be bailed out? Like that's kind of our framework from 2007, 2008. But that's not really a helpful way to look at it. First of all, Evergrande is most likely not going to officially get bailed out. Almost certainly not going to get officially bailed out. What China is most likely going to do is kind of what it's been doing for years, which is to restructure the companies, restructure the debt, and restructure the industry as one. Because this is the sort of authority and power the Communist Party has. It can sort of move all the pieces around. It can move debts here and liabilities here and employees here and assets here. It can do whatever the hell it wants. And that's typically what it does because it typically needs drastic, wrenching transformations, obviously of its whole economy, like I was saying, but in particular for each of these industries. And it can't do the whole economy at once, but it can sort of use its authority to do it sometimes industry by industry. This industry in particular is so massive that it's sort of beyond its reach. But what it's going to do is it's going to try to sort of bring domestic debtors and creditors, to the table to find a deal. Other companies will start purchasing parts of Evergrande's portfolio, and there's going to be mea culpas and public apologies and all that sort of thing along the way. The good thing is that for China, the good thing is that a lot of the real property and a lot of the debts and all the liabilities and all the major concerns on the financial side, they are primarily concentrated in China. The Chinese property market is the asset for Chinese people, mostly, especially kind of at the scale in a lot of the cities we're talking about. So that is limiting things much more to China than the U.S. financial system, which was, when the subprime hit the U.S. financial system, which hits everything. Very different. The Chinese financial system is not nearly as internationalized, and it's also much more state-run. So there's a lot of authority the government has at the start. So it can do certain things where the U.S. was sort of questioning, should we do this? Can we do this? Do we have authority in 2007, 2008? Now it's very different. You have a government that sort of knows and has far more authority in this sort of area. The other major element that the Communist Party is going to bring to bear is the local government. So local governments across China are already being told to prepare to handle the fallout within their regions. So that means local governments are going to be trying to preserve jobs, to offload properties, to transfer assets, and to try and basically maintain the basic integrity of all of the real property portfolio within their territory. And there's limits to this. Obviously, they don't have control over people in other provinces who own different things, but the Chinese central level will be doing things from a financial regulatory level to try and control the different flows and also monitoring asset prices. So that's, as you can imagine, all of that stuff I was saying, this is sort of this game where the Chinese government can use all of its different levels to sort of manage everything in a totally sophisticated and impressive way. Yeah, not really most of the time. What is really happening, what we're really seeing, I mentioned sort of what's going to happen, what's happened to Evergrande. And we got to always remember that Evergrande is just one of many property developers who are all getting hit. It's just it took on the most risk, took on the most debt. It is also sort of also kind of being singled out. So that's what you're getting. But you have these sort of systemic problems. But if you can take a haircut, if you can reduce the debt levels, if you can limit the construction, you can sort of renormalize this in some sense, just within the production side of the industry. Again, you take in all of the excess volume and all that, all the other properties, you're looking at something very different. But assuming that's not all hitting at once, that is, the government can most likely manage all these different little tidbits. But what's really going on is these local governments are being told to do this and manage that, but really they're preparing for social unrest and threats to political stability. So just like the pandemic was an excuse to mobilize public security infrastructure, the whole grid system and the various internal security measures China's developed we used all that to manage a public health incident. We used internal security to manage a public health incident. Economic contagion in the property sector is an excuse to do the same. And we don't think about it in this way. We don't think, 2007, 2008, the U.S. government mobilized police across the country to deal with potential unrest. That's not how things are in the United States. But in China, that is what is happening. And local governments are going to be paying out cash and to all sorts of people. They're going to be basically trying to maintain stability within the region. So there's the property stability, but there's also just social and political stability in general. So if people don't have homes, if they're losing this, if they don't have money, they're going to do whatever kind of it takes to keep things stable during this difficult period. Yeah, and the good thing about what the local governments now is that they actually have experience in this from the pandemic. They're more experienced at these sort of minute controls of people and behavior and monitoring and surveillance of individuals and activities and figuring out threats and using algorithms and everything to figure out how to invest their time and the resources. So they got good at this. They got a lot of experience. I mean, in a terrible way, the pandemic was almost a trial run, a training run for things like this, mad runs within the Chinese socioeconomic system. This is not going to be pretty also. I mean, the Evergrande took advantage of Chinese policies, to make really risky bets. And it's kind of similar to basically Evergrande was trying to become too big to fail in, like a financial company in the West did. And also kind of like American tech companies do now. They're such important platforms that the government couldn't regulate them or break them up or whatever it is. There's that sort of similar mentality going on there. It's just basically whenever a corporation gets to a certain size, a scale, it bumps up against the public corporation of the state. And that's just what you see. So China intends to punish Evergrande in particular for its behavior because it needs a signal, needs to send a message. But the issue is that the Chinese property sector itself really is too big and too important to fail. And that's what I was saying earlier. If it really had to deal with this overcapacity, with the speculative assets, if it had to allow home prices to actually fall or to construction to stop, I mean, this is a third of the Chinese economy, something like that. It's so massive that it's hard to really get your head around. And there are so many things that could go wrong that the government isn't just poking its head into all sorts of things willy-nilly. What it's actually doing is it's trying to do the minimum number of things possible that could not mess things up, but it could all easily mess things up anyway. No one knows how to handle this property problem in China. No one. Realistically, there's not really a way to handle it outside of, there's a lot of suffering that'll go on that we talk about in another video. But this is basically what's confronting China right now is how do you manage your declining property sector? Evergrande isn't the only developer that's getting hit. They're all being impacted, as are foreign consumers, foreign investors, and domestic consumers in China. Basically, everyone who is buying the party line about China's future growth prospects is getting hit. And now we have a weird thing where the whole industry, sort of global investors, are all waking up to maybe we were sleepwalking. Maybe China isn't quite the story we were imagining. Its future isn't going to look like we thought. And that's why we have these crazy surges of interest and talk and everything going on around the world, and asset prices, equities in all around the world plummeting, whether it's in Japan or the United States. People are trying to figure out what happened during this dream where we imagined China could keep growing and building forever. The big problem with all this around the world, the primary problem the world is thinking about, now we've kind of talked about China, how it can try and manage its system and manage this stuff. We'll just briefly talk about, what does this matter for everyone around the world? Well, property markets are tied at the hip to finance and to commodities. Basically, property development and property purchases have to be financed. This requires real materials like, cement, stucco, if you had to make that, iron, copper, plastics, all the stuff that you need for buildings and building subsystems. You have to have all that. And you have to finance every single thing. Property is the primary collateral asset. It's the one most favored by big lenders like banks. They want, when you get any big loan, they want to know what your collateral is. What can you loan against? The best one has always been property. So you have the need to. Even though this is true. Even though we live in a world of increasingly intangible and value, like that's embedded in software or services, that's not how finance works. In finance, it's still collateral. It's still hard assets. A lot of money is spent just funding property construction, property purchases, and then lending against these assets. That's a lot of what finance in general is doing. It's insane how much of it is really just taking money, taking capital, having it become related to some real property thing, building or entitlement or zoning or whatever, and then having it move away from that. So you basically you're always in finance, you're always funding construction and purchases and lending against these assets. And it's just, like I said, there's financing is embedded in everything with property. We all learned this when the subprime market imploded in 2007, 2008. That's kind of what we all saw. But at the core of this is that, bizarrely enough, in a lot of areas of finance, real estate is treated like it is the real economy. There's something deep here. I have a background with some of this stuff, and there's a very bizarre sense. It might be related to why we keep having property bubbles everywhere, but within finance, the real economy often feels like real property. It's a very bizarre thing that's going on. Finance has not evolved into the new world of businesses and tangible assets and software and services. It hasn't really evolved in the way any of us would want. So it's just embedded in property everywhere. So people in finance are wondering, well, okay, if property is embedded everywhere in finance, and even more so in China, where is this going to spread? So, for people who don't know, the financial world uses a disease metaphor when they're talking about trying to predict where a financial problem will spread and how far. A bad event happens, and everyone looks to see what else is infected. They look to see what other industries have been hit by the contagion spread. So it's always contagion. This contagion started in Thailand and it moved to Singapore, et cetera, et cetera. It started in the United States, it moved to here, moved to there. That's the metaphor. And what you know about property and what you now know about property and how embedded it is in everything in China, and how embedded China is in the rest of the world economy and the whole production side, that means that contagion is inevitable. It's here. There's contagion everywhere from this Chinese property credit correction. Right now, it could be way worse than a credit correction in a little bit, but that's what we see. So the contagion is everywhere, and it's the two. It's showing up in commodity markets, right? So all the materials that you have to build, all the imported materials like from Australia that you need, that you're used, the iron from Northern Australia that's sent to China, all things like that. They're all getting hit. Everyone's sort of correcting their future prospects and their estimations about what the world will look like based on the reality that the Chinese property market, this massive engine of the Chinese economy, is slowing down, or maybe even might stall entirely. The real question, so it's there, it's in commodities, it's in currencies, it's in American equities, Asian debt markets, Asian equity markets, it's everywhere, because China is just so embedded in everything. And more importantly, the narrative of Chinese growth and expansion is so embedded in everyone's mind, particularly in the financial mind, that no one even knows what to imagine when this starts to happen. So the real question is, it's how deep into the world financial system will these problems go? Most likely, it's going to end up limited to Chinese, financial and real property markets, just because, like I said earlier, it's really overall pretty closely held by Chinese people and businesses and governments. But even if Evergrande doesn't cause a major blowup, what's happened is it's already reconfigured everyone's expectations about where China is going and how well its economy is actually doing. So, kind of like, financial problems in the Shanghai Stock Exchange in 2015, 2016 soured people on the Chinese equity market, both within and outside China. And something similar is happening now for the Chinese property market. And we're getting to the point where people are starting to realize the entire economy is not quite what it seems it was made out to be. That is really where we're really at. But like I said earlier, people can't price this. You can't price this. It's too massive a change, and too, we had a massive mostly organic transformation moving towards China, and all this happened over decades, et cetera. To have this sort of wrenching reconfiguration of everyone's expectations, it's a very difficult thing to process. So I wouldn't take too much stock into financial markets and what they're saying. It's going to be tough. Everyone's still trying to make a buck and play the swings. You don't really want to be listening to all of that. You need to be worried about, what you're actually seeing. And basically, you just got to pay attention to how bad things get in China for the immediate concern of what things will look like, how this will play out, the next couple of weeks, in a month and a half or so. And then we're going to have to start looking at, assuming the property, nothing doesn't freeze and seize up entirely. Then the real question is, okay, so now what do we do with all of our new expectations? What is China really? This is the story I'm trying to tell in part. And this is kind of, a sign of where things are. So, one consequence, let's say this property market in China doesn't recover. Doesn't recover to anywhere near the expectations, right? It's permanently lowered, way more marginal sort of industry, if you can even call it that. What that does, once you take out the expected growth in China's property market, its growth rate through 2030 just plummets. It makes China's ability to pass the U.S. economy, in GDP, it starts to look like a pipe dream, like almost impossible. So that's the start. The basic thing. If just you add in the fact the equities are bizarre and weird, and you add in all the protectionism around trade you're getting these days, you add in the limited consumer and indebted consumer you have in China, who's invested heavily in real estate that is now threatened. All the difficulties China's having now with political control over technology companies and technology investment. How you ever, not even overtake the United States, how you ever keep this together and functioning is the real question. So let's talk about a couple more things really quick. I think one of the most important things to keep in mind overall, so we're talking about Chinese property market, right? And I was talking about how there's all these extra units and what do you do with them and all this. Well, one thing we always have to keep in mind is demography. So there is the overall size of all markets is determined by demography. How many people are there? How many children are there? How many adult consumers are there? How many seniors do you have to support? How many young children does the state support? Does it have to educate? This is the main thing. So you have the full population size, and then you have the various adults who can pay for it. You sort of just break down everything demographically from the massive overall size of the population. Well, one of the reasons that the property sector, one of the reasons that the entire world is waking up is that China's population is shrinking. And this has huge implications. And China's actually lied about its population size. So recent studies have basically found that China is not really at 1.4 billion people. It's probably closer to 1.25 billion. And I know that's still billion, and it sounds like a lot, but again, this is over 100 million people, maybe 120, 150 million people that don't exist in China. And there's a whole thing that we need to think about. There's a one-child policy in China, and somehow China's population was growing for decades and decades after that. The basic math of having one child when you had two parents and then having a growing population, obviously there was something up about this in the first place. Well, we now know that is, well, that, it's not just that the Chinese population is going to shrink in the future. It's that it is smaller now than we expected, and it is shrinking faster than we expected, and is already aging faster than we expected. It's all happening much more rapidly. And this is a major deception that China has been propagating, because when we're talking about the real estate market overall and how many units do you build, where do you build them, you're basing this off of the population numbers. So all of China's developers had fake, fraudulent numbers about how many units to build in the markets they can expect. And that's across the entire Chinese economy. And what you're doing is it's all wrong. So the overcorrection, the amount of, just the real estate context, the excess units you have compared to the number of people who can buy them, and in which cities and all that, it is way worse than people even think. So the real question, if you have a smaller economy, a smaller population that's already shrinking and aging, who is going to fill all of these apartments when you already have people buying second and third apartments? China's urban household, home ownership rate, basically the home ownership rate in cities, it's 96%. In the US, it's only 65%. Now, there's still a lot of people in the Chinese, the rural Chinese cities. In rural China, in rural villages. The problem, though, is that China's cities are all the main ones, the most productive ones, are all saturated and they're closed to new people. So you're building a lot of apartment complexes in extremely marginal places that have no economic activity and units that probably have very little value. So there's deep problems going on. We're talking now about the property sector, but this deception about the scale of the Chinese economy, the Chinese population, is so large that it's terrible. Officials have been using this to inflate output. This is another way to gin up the numbers. If you're a larger population, then you have more of this, you can justify this, you can say this. It actually just raised the numbers, the growth numbers, the whole propaganda machine for the internal and external, audience of the Communist Party. And what this just means is China is massively overbuilt. It has millions and millions and millions of apartments that will never be filled, and that are worth very little money at this point. Where was I? Yeah, and so that's basically where we are. And this is the way economics works. This huge oversupply of homes must eventually translate into lower prices, because this is just how it works. We have way more of a supply than you need, so prices go down. Part of the reason the government is so wary of lowering demand at all and keeping consumers to invest in is because if you start lowering demand, you're looking at something that, this is the sort of ship that can never be righted again. In Japan, they had a lost decade since the 90s, forever basically, but starting in the 90s, and in part it was because these asset prices they just never climbed up again. The demand never returned, and that's kind of what China is going to be worrying about, and it really should worry about it. But China's been avoiding this for so long and lying and trying and just inflating everything that it's going to be punched in the mouth with its property sector, no matter what happens. There's no way around it at this point. There's just systemic lying about the basic market size, about the basic companies, about the loans, about the debts, and everything in this sector. And this issue, it's a big reason why the government is almost certainly going to fail to manage this and the other crises that are coming its way. There's just no kind of way to get around this huge issue. Okay, so we're gonna talk about one last thing, and I'll let everybody go here. But the crazy thing is that a lot of the smart money in China has already known how messed up all of this is for years. Since a lot of people, 2005 or something. Uh, the place, the place that keeps investing and keeps focusing on China, keeps hyping China, has always been institutional finance. This is the big banks and the asset managers and some other market players. They keep piling in and talking the talk, even though things have gotten crazy. And you think they know better and that they know more than you do, and then da 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 and da da da, but not. They don't. They don't. I mean, first of all, most of the real analytical firepower in finance is in hedge funds. These aren't the actual big players in the same way. Um, Not big players, but it doesn't matter. They're in hedge funds, not in these sort of massive institutional organizations. I mean, a lot of these behemoths are quasi-public institutions, the way they function. So they're very bizarre, very weird, very invested in all sorts of things that are not analytically, mathematically, or logically driven. But it's very, very weird thing, the whole fact that any of that happened. The best explanation for why you have this, why everyone, I mean, companies right now, finance, Western finance is still desperately trying to get into China. They are, just drooling at the mouth just to get in. They still think it's there. They still think they still think this is where they have to go to get the returns on their investment that they demand, on their money that they demand. The best explanation for why is just that they don't know what else to do. They really don't. They don't know where else to go for these returns on their investment. It's, we live in a bizarre world where there's almost endless money floating around. There's never been more capital in the world ever in human history than there is now. And at the same time, there's also never been less confidence about what to do with any of it. Money just passes around. It just moves around. And what it usually does is it gets moved around by narrative. So what we get are these just endless bubbles driven not by any real value, but by a narrative around it. And that applies to a lot of tech, including crypto, and it applies to property. It applies to national rejuvenation stories. It applies to so many things. It's all narrative driven to a disturbing event, and to a disturbing extent, just because you get to a point where it doesn't matter, how smart you are, genius you are, whatever it is, when you're trying to figure out something like, hey, how do we reconfigure the entire Chinese property system without having any problems spawn, and no one's ever done this before, and once you start doing something, it could lead to a whole cascade, and no one knows actually what it would lead to, and who knows if you actually can even have a total handle on what's even going on, let alone what your actions will do. Your brain fries. There's, a lot of people are drawn to politics and economics and finance because you can make these huge motions. You can, make huge deals. You can impact markets. You can get immediate feedback on these things. It's very dynamic and very interesting in a lot of ways. But then you reach this certain scale where you're just like, I don't even know what to do. If you manage trillions of assets, I think BlackRock at this point it manages like 10 trillion, 8, 9, 7, 10 trillion, something like that. It's insane. To even make a dent in something, in investments of that scale, you need a massive investment, like something that really moves the needle for 8 trillion. It's enormous. It's like if you're Apple, if you want to have more growth, you need a whole new product. You need something as great as the iPhone. And if you're a massive BlackRock or whatever, all you have are stories. There's no industry, there's no business, there's nothing that is going to move the needle for your trillions and trillions and trillions of dollars. So you're dealing with all these aggregates, and you lose sight of everything. And in the world today, the only impressive story that anyone can think that can move something like that is China, is this idea that maybe China is going to just keep going. That is trillions. I mean, like I said, 52 trillion in that market and trillions more everywhere else. That's something that can move everything. So that's why BlackRock is still trying to get into China, even though it's like getting knocked down. This is about finding something to believe in on a deeper sense too. I mean, that's what this is. It's like when you really get to the heights of finance, you're not thinking, oh, how do I make a buck? You're like, what can I believe in that moves things forward? If you want to take a more, not hateful vision on what 5 people in finance are doing or whatever. At the highest level, you are sort of asking questions about what is moving things forward. That's the only thing you do. Otherwise, you're just moving money to make local bets and time-constrained bets. It's actually very not that interesting. But at the highest level you are, what moves things forward? And the truth is, no one has any idea. I mean, all these bets into property in China, into crypto in a lot of ways in the U.S. and in Europe, it's kind of the flip side of all the conspiracy stories that it spawned and grew especially popular in 2020. We have a growth of nihilism and fear and doubt and hatred and rage and all sorts of other things and resentments that you need something to believe in, and people are pulled to, doesn't matter how crazy it sounds. Maybe China's going to keep growing forever. It's going to manage property and do great forever, unlike every other country ever. People will believe it. And the more you need to believe it, if you're like a giant institutional finance company, you'll believe it. Or if you have no sort of art or religion or history or family structure or community or deep friendships or meaningful relationships or sort of meaningful work, all the things that have sort of been taken from a lot of normal people in the Western world, in advanced economies, just as a process of modernization moved on. What do you do? I mean, believing a conspiracy theory is actually something to believe in. So, not want to get too far into that, but in general, there's nothing super special or super smart about people at the heights of finance or the people at the heights of the the Chinese or U.S. governments. These are just people, and they're believing all these stories just like everybody else. So, very important to keep in mind. And unfortunately, that doesn't make you feel better about how well things might get managed, but you got to know that that's the way it is, because it's a very bizarre thing that the largest and most storied and impressive institutions in a lot of Western finance are the ones who have bought the Chinese story hook, line, and sinker the worst. So good to keep in mind. And also, we just live in a world. We live in a world where nobody knows, like I was saying, nobody knows what to do with this money or kind of what to believe in. So, people do try to analyze what's going on, but they also spend the time just reading what everyone else thinks. During the pandemic, everyone just started reading the news. That was your connection to reality. So you just read the news and you read what was going on. And then from there, you just, you formed theories about the world and what was going on, although you were never actually touching the world, never actually engaging with reality at all. It was just mediated through words and through articles. And that's what you see in journalism. Everyone in journalism is just reading the other articles and kind of writing another article that kind of comes from that one. That's the same thing you see in finance. People are making the same, piling into the wrong assets at the same time, and then they all scramble to get out at the same time, and that's why you get all these bubbles and these problems. It's not people actually looking at things kind of as they are. We don't have the time, we don't have the energy, the brain power. We're expecting other people to have done that work, and then we're caught on the wrong side of one of these problems. And we really got to be very wary of this, because the fact that narratives are running so much of finance in particular, and the economy, just economic sectors in general. So whenever you have like a trend in tech, the next thing for phones is going to be foldable phones. It's like, that is just a narrative about where things are going, created by someone, who knows? Like, maybe it was sent out by the marketing department. It was weirdly A/B tested in the shadows. It was just a natural desire. People were sort of reading the way things were going. Or the same thing with augmented reality. Is that the next progression of phones, of mobile technology? Maybe not. Will you make it actually an innovation that will actually become an innovation that is sort of usable and accessible and cost, cheap? Like, is that going to work? Like, how long will that take? 20 years, 30 years? You have no idea. It needs to sort of happen. You have to sort of see it through trial and error, like on the ground, and see how it actually happens. But we don't live in that sort of world. We live in the world of these trends. We're sort of expecting this to happen. We're expecting that to happen, and we're all basing all our decisions off of it. It's a very dangerous thing. So, I'll kind of leave it at that, give a few last thoughts on this, and get back to just Evergrande, because it's what everybody here is listening about it for. We really do need to think deeply about what the hell is going on in our economic system if what drives investment is narrative. I'm just gonna say this one more time. It is so freaky when you really learn about how deeply this is true. Very freaky thing. But that's a question for another day. So this is the Evergrande moment, right? This is a big moment for the Chinese economy and for the world economy, because the process of deglobalization, of the unraveling of the Chinese economic miracle. All this is beginning, at least. This could spiral out of control, especially if some unseen risks or liabilities come up and just blindside the Chinese government. But as with the pandemic, I think there's enough measures to keep a handle on things for now. But all the measures, all I was talking about, the debt ratios and the leverage and all this kind of stuff that the red lines the Chinese government has put in, these are ways to start the process of rationalizing the Chinese property sector.